Hi guys, and welcome back to the channel. So today we have a very exciting video for you guys because we're going to be taking a look at Alibaba stock. It's going to be a long video because we're going to go into detail with this complex business Alibaba. Charlie Munger has just bought a lot of stake in this company, and we're going to talk about that, why he did it, if we can take that as a sign of it's a good investment or not, if e-commerce, which is the main sector that Alibaba is in, is getting crowded with too much competition, or if it's just a great buy right now, and if it's actually over or undervalued. All these things we'll be taking a look at in this video, so stay tuned and stick to the end because we got some insane things to look at today. So without further ado, let's get right into it. So first of all, what you are all probably wondering, Charlie Munger, a guy who is an old man, almost 100 years old now. And if you don't know Charlie Munger, he is Warren Buffett's business partner. I hope you know Warren Buffett because he is the greatest investor of all time, and this guy is his business partner. Almost 100 years old, has just bought 20% of his portfolio, which only consists of around 5 stocks, some in very small quantities, and he has bought 20% of his portfolio, almost 40 million US dollars, and that is a big purchase. He already owns a bit of has some things in China, some stocks in China, because a little bit of his wealth in his portfolio is actually invested in this thing right here, Himalaya Capital, which is just an investment firm that has recently bought and now sold Alibaba stock, and they invest in Asia, and stuff like that, right? He's not completely new to this sector. Okay, so first of all, we got kind of understand what is actually going on with Alibaba, and I can tell you it's a very complex business and business model, and they got a lot of businesses like subsidiaries, small companies that operate underneath this big Alibaba group. And as you can see right here, this is kind of the multi-engine business, a long-term growth. This is kind of a pie chart of all the sub-businesses that is inside Alibaba. You basically buy all of these companies when you buy this. So you can see 46% is China retail marketplaces. That is their biggest source of revenue. Then they have China e-commerce retail, and you can see they have AliExpress. You've maybe heard of them if you have heard about drop shipping. That is an e-commerce store. They have cloud computing, which is a place where you can like Dropbox, where you can store things in the cloud, and also Amazon has got this, and they are making insane money with this. Growing a lot of their earnings with these small businesses that they have recently started. They are in everything: logistics, entertainment, all kinds of stuff, digital, entertainment right there, cloud computing, retail, e-commerce, everything. Okay, even actually they have got I think food chains, and they have actually also been starting making like vehicle production, so electric vehicle production. So they are in every sector. And what does that mean? Well, I can tell you it's very good, because that means that you get it's kind of like buying an index fund. You basically buy insane amount of small companies. Small, they are huge still, but a lot of the small ones, they aren't really profitable yet. So we have to wait and see with time if they become profitable. And a lot of their investments, they invest a lot in these small companies because they want to expand, just like Amazon has done. Amazon have made a streaming service. They have Amazon Prime Video. They have this book thing. They have Audible. They have Amazon Kindle. They have God knows how many things, right? So they have everything, and that is what what Alibaba is kind of trying to replicate and do even better. So there are a lot of other competitors, though. There are competitors taking up the high end products and the lower end products, the cheap stuff. They are kind of beginning to take and take some stake in the market, but it has to be said that the market is expanding with the population in the world is expanding. The Chinese people are getting higher middle class, so they get more money. Everyone is can buy more stuff, spend more money, that kind of stuff. The economy in China is rolling, and in 2028 it is expected to be just as big as the US economy. So yeah, if you believe in that, well, then it can be a great idea to look at this stock. But now we gotta look at some business highlights from this sheet right here. So that's some good things and some bad things in here. The bad things are actually not that bad, because they're right here. Net loss, blah blah blah. They lost. So yeah, the share price has been moving down here since since October. It has been going a nice way down here. So I'm going to get into why this is happening, why the stock price is actually going down right now when Amazon is going up, or at least holding the same graph. So I'm going to get into that later, but right now let's take a look at some of these things, because they're actually insanely crushing it here. You can see the revenue right here, increase of 64% year over year. They are growing. It has to be said that some of the things that are growing most are the small companies you saw earlier, the cloud storage computing thing, and maybe not so much the commerce retail thing businesses. Those are kind of more stable, and these small kind of startups, in a sense, they are growing their earnings and stuff a lot more, and the revenue, of course. So they are growing their crazy amount of new consumers they're getting onto these platforms, and their mobile the retail marketplace has reached 925 million in people in March, an increase of 23 million over December 22. So there's a loss from operating profits, and you can see these kind of headlines right here, and we are going to read this right here, because this is an article from Yahoo, and let's just read it here and see what it says. Investors may read headlines such as Alibaba posted its first operating loss as a public company and immediately look to hit the sell button. That is a less than ideal way to view the company's loss right now. Yes, Alibaba stock dropped on its earnings report, and yes, a downside momentum is not in favor of investors in Alibaba stock. However, Alibaba has been beaten down to a level that is simply doesn't make sense. Alibaba's recent earnings report highlighted the opportunity available to investors as an incredible discount today. The Chinese e-commerce giant posted revenue that beat analyst expectations by a significant margin. Alibaba's 187.4 billion, which is $28.6 billion in revenue, greatly surpassed expectations of this. With this 64 year-over-year growth rate. Basically, don't jump to conclusions when it's about these headlines that you read. They reported insanely nice earnings, and it has been beaten up, as they say, and it's a great buying opportunity right now. They're growing like crazy right now, so I think it's I am personally going to look into investing into this company, and that's for this reason. I want to get into these retail markets more, and I was looking at Amazon and this stock, and I thought, why not try some Chinese companies? That could be fun to try out, right? Get more diversified in other places. Now let's take a look at on here Simply Wall Street, as what analysts say about the company. So first of all, let's just roll down here to long-term price volatility versus market. How volatile is Alibaba Group Holding share price compared to the market and industry in the past 5 years? So here's the industry, the US online retail volatility over the past 5 years, right here. And BABA is significantly below that. It is not a very volatile stock, and it has outperformed the S&P since 2014 when it went public, this company. So it has outperformed it, the S&P 500, but not this year if you just take what it has done this year. So for the valuation, it is actually quite interesting because right here you can see it's undervalued with 32.8%. To have an undervalued company is very nice because then you reduce the amount of risk you're taking. This just means that this is most likely a great price to buy it in at. Yeah, it has to be said that also a stock like Amazon is actually also undervalued with about the same percent. So yeah, there's another direction that you can take if that is what you're most comfortable with and you want to stay in kind of the other part of the world and not go into Asia like that. So future growth. How is Alibaba Group Holding forecast to perform in the next 1 to 3 years based on estimates from 50 analysts? That is a lot of analysts. So it has to be said that of course this great annual earnings growth we saw, like 60% in, for example, the cloud computing company. That is because it's kind of a sub company that is so tiny that its earnings grow a lot faster. And the overall Alibaba Group Holding, they of course grow their earnings a bit slower. So they forecast a 10% annual earnings growth. That is fine. It's not insane. And I can tell other analysts say that it's a bit more. Some people expect a little bit more in the future of this company. So yeah, this is just the graph that shows the revenue and the earnings. Let's now take a look at the past performance because that is really where we can learn the most. We can try to look out in the future, but we can't really be certain that it's actually going to be true what we see. But the past performance is something that we always know what we have to do with. So 30% historical annual earnings growth. That is good, right? That is a lot higher than what they are expecting for the company in the future. So you can see here the earnings has just been blowing up here over the past year, of course, with the pandemic and all these sorts of stuff, and the revenue also has jumped a lot. So the financial health is also great. The liabilities, long-term and short-term liabilities, are looking great, and their debt is insanely low. Actually, you can see this is the revenue going insane growth in the revenue as we saw before also, but the debt actually almost stays the same, actually goes down a bit. That is very surprising and very good, of course. That means they have more equity. Dividends is probably not why you want to invest in Alibaba. So I'm actually pretty fine with the dividends. I'm not buying dividend stocks. I'm not a dividends investor. I just want some growth. I don't care about dividends. They can keep that money if they want. So it's actually not that big of a deal for me personally. But if you are a dividends investor, maybe this is not the stock for you. The management team is also something that we have to take a look at, and that is very important. Charlie Munger especially is known for really caring about the management team, and he has apparently found out that this is a great team. So you can see right here the CEO, and they of course they have a lot of people in these leading roles, because they have these subsidiaries, these small companies underneath. So yeah, the management team is seasoned and experienced with 5.3 years of average tenure. So yeah, you can see the names here. Yeah, ownership breakdown. No one has really sold or bought a lot. And if you're interested in the ownership breakdown right here, yeah, you can pause the video and take a look at that. So, and shareholders have not been meaningfully diluted the past year. So yeah, we haven't seen some crazy growth that we can't expect in the future. And top shareholders, it's all of these banks and investment firms that owns a lot of the company. So that was that. And what we have to talk about now is actually very interesting, and probably also what some of you guys have been waiting for. That is, why is this stock actually going down right now? Let's just find the price right here. You can see, let's say 5 years. You can see it's going up, and it's going down. 30% in the red. So why is this happening? Well, there's a couple of different reasons for it. For one, Jack Ma, which is the richest guy in China, he's like entrepreneur. You've probably seen his face before, and he disappeared for 3 months. Nobody knew where he were, and now he's not the CEO anymore of the company. You could see that before. So that has kind of made people rethink a bit about the management team. That is probably not the biggest factor playing into this. The biggest factor is probably growing influence by the Chinese government. For example, right here you can see that actually Chinese government forced Alibaba to sell their media assets, and that is one of them. One of the things. And then also Ant Group IPO was held and was suspended and did not happen. That was an insane IPO with a lot of shares going into the market, and then suddenly the government said, you know what, we can't allow this. So basically, what people are getting afraid of the government kind of taking too much power in the company, and that is what a lot of investors are afraid of. So it's kind of mostly fear, actually. Also, a thing called VIE stands for some long sentence. Basically, what it means is, in China, you can of course buy Alibaba. The thing is, the Chinese government has also, now with the regulations, they've made this rule that you cannot trade these stocks inside China outside of China. So if you're not from China, then you cannot get your hands on these stocks. But to get kind of around that whole thing, well, then they have made this. They've used this VIE, where you basically buy something that tracks the price. It's basically, you kind of haven't got your investor rights. Normally, if you invest in a company, probably not if you are using like Robinhood or eToro or Weibo or something like that, which investing apps that many people are using. Actually, when you're doing that, you're actually doing the very same thing. You're not holding the shares, they are buying the shares, and then you get kind of just a approval of owning a little bit of the share that you're actually not holding. So it's actually not you that are owning the stock. You can't go into the investor meetings and listen to the CEO tell you about the first quarter and stuff like that. I can do that with my stocks, for example. I can, because I've bought them through my bank, then I own these shares completely myself. It's not just through some broker, that some app like Robinhood and stuff like that. I actually own them myself, so I actually get mail to my house where they say, now there's this annual investor meeting that you can join. That is not going to happen with this thing. You haven't got any rights over the company. It's not like if you bought from the US you bought like 1% of the company, then you actually could not then you hadn't got 1% of the power in the company. So that is something that people are getting mad about, and so that is causing the price to drop. It's fear, and it is people that are mad at the Chinese government, afraid that suddenly the Chinese government are going to do horrible things that will impact the company. So that was that. That is simply why it's going down. That is the only reasons. That's the only reason that it's going down. It's fear, and yeah, that is it. So if you, of course, there is a reason behind this fear, and if you share that fear, maybe you should look into Amazon. Amazon has a lot of great things also, but it isn't in this in the Chinese market, of course. And I would say personally that this probably has more short to mid-term growth ahead of it. I don't know if we will ever see Amazon kind of taking over the whole world, because Amazon, Jeff Bezos, he has some crazy ideas, and Amazon wants to basically take over everything, and that is possible. They are in a lot of sectors, they are dealing with a lot of things, but I don't know if they will take over the entire Chinese market. I don't know what will happen, but of course it's just as easy for a Chinese person to go and use Amazon as it probably is using Alibaba. So maybe in the future, if either one of the companies starts kind of just suppressing the other one completely, then you should probably look into the one that is winning the fight. But until now, I would say there's a lot of market share, there's a lot of potential, and there's enough market for both of these companies. So I think that they will easily be able to grow a lot. Also, at least they are undervalued right now. They should not be undervalued. Come on. Both Alibaba and Amazon, they're great companies with insane financial health, and they're just so established and looking to grow steady growth in the future. So I can't see why they're not more expensive. So as I said before, I'm going to look into buying some Alibaba stock. Actually, I also want to buy some Amazon, and the reason I'm starting out with Alibaba is because simply the share price is a lot cheaper. I'm not going to buy like $3,000 in Amazon stock that is around that stock price that it is right now. Where the place where I invest, I can't buy fractional shares, so that is the main reason I'm buying this. But also, Charlie Munger is not buying isn't buying Amazon right now, so he has some internal he knows some Chinese people, and many people think that he has probably gotten some insider knowledge about Alibaba and their business from some Chinese people that he knows, and then he has made this big decision. So yeah, I'm going to buy this stock in shortly, and I will make an update on how much I buy, how it's going, all that sort of stuff. But I can tell you that AliExpress right now, guys, it's like Amazon. They are in so many things. It's crazy. So yeah, enough of me rambling around in the same things. It's a great company, I think, and Amazon is too. They are both established and could be very good in the future. So yeah, that was pretty much it for this video. I would really appreciate it if you liked the video, because it has taken me a lot of blood, sweat, and tears, not only to shoot the video but also to make research for it. That has taken an incredible amount of time actually. So if you please subscribe and like, and write a stock that you want me to take a look at down in the description. I've been going through some Danish companies a couple months back, and I'll probably take a look at some more Danish stocks here. We got some big stuff in the works, guys. So if you want to stay tuned for that, subscribe to the channel. And actually, I'll be making a Discord server shortly, so check that out when I make that. Yeah, that was it for this video. I hope you enjoyed it. Have a great rest of your day. Peace out.